With gold hitting several all-time highs this year and the senior producers set to announce stellar Q2 results, how do junior development companies position themselves? Simon Marcotte is president and CEO of Northern Superior Resources and newly listed on gold. Simon, welcome to Kitco.
Thank you very much for having me, Michael.
Now, Simon, the focus of your two companies is on gold. Why are you focused on precious metals?
Because there's quite a bit of wealth that we believe is going to be created in gold. I've been involved in commodities for longer than I'd like to admit. Been involved in many others, and especially in strategic metals as well. Arena Minerals, for example, was our making, and it was important to get out at the right time. So we sold Arena Minerals to Lithium America, I would say, close to the peak of the lithium cycle. And since then, we've deployed our energy back into gold. Gold has been doing well in recent months, but I don't even think this is the first inning of what we're going to see. Gold is doing well, but really shouldn't be doing well. For gold to do well, you need to have the real rates that go down. So that either means the rates are coming down or inflation goes up and the rates are at the same level. So real rates coming down, gold goes up. We haven't seen that yet. The gold is going up right now because central banks are buying. I don't want to dive into why, but I wouldn't bet against them. And also there's been a lot of Asian demand for gold. And to me, that's very clear why. Is because the yen, which is a reserve currency, is deflating very rapidly. I mean, I don't want to say it's collapsing, but it's breaking down. The Central Bank of Japan is having a hard time to maintain its currency. So anyone in Asia who's seeing that is flowing to gold. And so that's just the start, because as soon as the real rates starts going down, and they will, then gold will pick up momentum. And I believe that's where equity price and equity valuation will play catch up. And I'm a firm, so either you have higher inflation, but the real estate market is not going to be able to sustain higher rates. Therefore, real rates going down, gold goes up. But I would bet that it's actually rates that are going to be coming down. Why is that? Well, inflation is more or less much more under control than it was recently. But now credit is collapsing. The credit is contracting very rapidly. That's why we have big deficits to counter that. But it can't keep going forever. So in order to re-expand the credit, the Fed's going to have no choice but to cut rates. And also the cut rates would help the yen, right? We need the won to stay pretty much in order. So I would bet that currently there's going to be more cuts than the market predicts.
Would it be fair to say, Simon, right now then that what has been driving this gold rally has been, how would you say, factors outside of the Fed cutting? So you mentioned at the start, central banks buying more gold. And then also we've seen the headlines that there has been more interest in gold from China buying just because of what's happening in the real estate market. The next phase, and then we hear this from a lot of guests, when we see the Fed pivot right now, concerns about debt, this will be the second leg of the driver, or the driver that's going to kick in.
Yeah, so there's no doubt that the deficit is accelerating fast, and we need to get this under control. I'm not the one that would say that we have a debt crisis. And that really is not necessary to have a much higher gold price. What you have is currency devaluation. So currently, they're all kind of falling in tandem. But the debt sounds big, but we need to put things in perspective. If you look at the household wealth that has been created over the last 5 years, since 2019, and I'm not talking about wealth companies, I'm talking about household wealth. That wealth went up by more than the current entire U.S. debt. So, it helps put things a little bit in perspective. So what I think is really going to drive the gold price Again, central banks are buying. There's clearly now a trend has been established where the central banks are moving away slowly, but has huge impact moving away from reserve currencies in the US dollar and into gold. And if they keep doing that just a little bit, it can have a massive, massive impact on the gold price.
There's been a lot of M&A in the space. Simon, BHP is attempting to acquire Anglo American and deal size estimated at $39 billion. There's been a series of other deals. Ascena Resources and Yintai at $368 million. There's been Alamos Gold and Argonaut. There's been Alamos Gold and Argonaut for $325 million. What's driving the M&A, Simon?
Well, the companies are making more money now, right? They've been watching their costs and their balance sheet, and they've been very reasonable for a few years now. And then the commodity is obviously helping a lot. If you look at just recently, the three majors all beat expectations on quarterly results, and that gives them more flexibility to do M&A. At the same time, there's been a massive underinvestment into growing reserves and building ounces for those large companies, and they need to replenish reserves. So that's obvious M&A. Now that's been a story for a while, but why is it happening now and accelerating? Well, now in this market, when you see M&A, the share price of the buying company tends to react well. So that's a very, very different situation. So if you're a director and a board of director of a larger company, if you're the CEO of a larger company, you're much more inclined to consider M&A than you were just a year ago.
What does this market remind you of, Simon? Metal prices are up, M&A is good, but are there any trends that are happening that are similar to past upticks?
Well, M&A wise, I would point out that, look at when Inco and Falconbridge got together, right? There was a big transaction in the early 2000s and really marked the beginning of a big commodity cycle and good performance for equity price. So I think that the M&A that we're seeing now and the big examples that you mentioned indicate the same thing. These big companies are getting together because they see that we're at the beginning of a good cycle. Now, you also mentioned equity price. So it's interesting because the price of gold, as we mentioned, is doing quite well, surprisingly well, if you ask me. But the gold equities are very, very cheap, right? And that reminds me of the oil stocks in the late 90s. The oil stocks were extremely cheap on an NAV basis in the late 90s and early 2000s. And it's because the market was not believing the higher gold price. At the time, oil was about $12 per barrel. And the market was saying that is not sustainable. The world cannot run with oil above $10. And we had an eclipse recently, which means the Earth is still going around the sun. and oil ended up going to $140 ultimately. But in the early 2000s, the oil stocks were pricing $10 a barrel at the most because they didn't believe into that rally. I think we're in the same position now. The market is not paying for the gold rally because the real rates have yet to fall. When that happens, again, I believe that you're going to see momentum pick up in gold, and the gold equities will start playing catch up in valuation versus the gold price.
I've heard this theme from other guests, Simon. It's kind of a show me situation right now to the markets. It's not Q1, and we've seen some nice results out of Q1, but we have to get to Q2 and show that this is a sustainable story.
Yes, I'm with you on that. But it certainly looks like we have a tailwind happening.
There's close to 1,000 listed juniors in the resource space, Simon. Then, there's an old story about telling the types of companies that are going to succeed in this. You just have to have a good deposit. You have to have a team that has done this before. Yet, there's so many juniors that are listed right now. The junior market has not been performing well. There's just kind of a question mark also just regarding kind of retail participation in the space. I'm just wondering if you see that there's any other types of models that you think are going to be working in the mining sector right now in terms of kind of making sure that these projects and exploration continue.
Yeah, absolutely. I mean, is there too many listed junior mining companies? Absolutely. I mean, most of these companies should be private. Most of these companies have assets that should be in the hands of prospectors, right? That will fund them privately and advance towards a discovery. And what works in the junior space is in mining in general, if you ask me, it is to build ounces. To build a mine is very hard, takes an enormous amount of capital, and it's a tough job. And there's a lot of very often difficult hurdles, to put it like that. To build ounces is where you get the most value creation, and it's especially true right now to build ounces and get to a size that will move the needle for a larger company to acquire, right? So a larger company looking to replenish their reserves, as we discussed, doesn't want to buy 12 small mining companies. They want to do one acquisition that will move the needle, that they can spend time on, and really make a difference. So the model, I believe, right now is to focus on building ounces from a deposit that is almost a standalone project and make it a standalone project. But what we're doing at Northern Superior is not a new strategy. It's to consolidate the camp of Chibougamau. The camp of Chibougamau had, 6 or 7 companies owning all of the relevant deposits there. And those deposits are so close to one another that it's obvious that they should feed just the same mill, right? But fast forward 2 or 3 years since we've been at it, and the entire camp of Chibougamau now, at least all the relevant assets, are owned by either us or IAMGOLD. And clearly IAMGOLD is now turning its attention towards that camp, as evidenced with the recent acquisition of Vanstar, who were their JV partner on the Nelligan deposit.
Help us out, Simon. We talk to a lot of juniors here, and everybody talks about consolidated, talks about district scale. How do you measure that when it is important and when you can consider that it is kind of a quantitative basis as something that has actually been achieved?
So I mean, district scale it's a double-edged sword, right? I mean, if you have several big deposits within a district that can feed the same mill, that's one thing. You can build on that. If you have this district scale exploration and have a lot of greenfield exploration to do, then you don't want to spread yourself too thin either, right? You need to be able to provide progress on your exploration per dollar that you raise. Otherwise, then it becomes a dilution spiral. And then the other thing is, for some different sectors, consolidation is needed just to get a market cap that's higher. I mean, you have a lot of very junior mining companies that will have a market cap that is so low that every if you have a market cap of 5 million, every financing you'll do, you'll dilute by 50%. And it's hard to get out of that spiral if you want. So consolidate to have a decent market cap and therefore access to capital, but don't spread yourself too thin either with too many spending on things that are difficult to create value with.
You have another company, OnGold, that started trading today, Simon.
That's correct. Yeah. So OnGold is actually a spin-off company from Northern Superior. Northern Superior is now the largest shareholder and will remain the largest shareholder of OnGold for the time being. OnGold will have all of our Ontario assets, including the quasi-famous TPK project. So TPK has literally a cult of followers behind it. TPK is the largest till anomaly in North America, and frankly, probably the world. So that means that really small grain of gold that are dissipated into the soil. But our team feel pretty confident that they've identified the source of that. Interesting drilling result that came out of that, 25 grams over 13 meters. So it's an extremely compelling project. And it was worth putting it into its own company with its own management team. Now, the management team we put in place is quite unusual, and we're doing something very different in Ontario. All of Northern Ontario, the valuation comes down to social acceptability. The relationship with the local communities throughout Northern Ontario are generally edgy. And this has been, all over the media. And the situation in Quebec is very different where I'm from, right? I mean, if you look in Quebec, the First Nations that are pro-development are being rewarded. I mean, the Cree Nation has a building downtown Montreal. They have their own airline called Air Quebec. And in Ontario, the situation is difficult for First Nations, and we want to take a different approach. We want to take an approach that is inclusive. We want to treat we want to treat all our partners, all the stakeholders, including or the local communities, as real and actual partners. So to that effect, if you look at the CEO that we have appointed for On Gold, his name is Kyle Sandfield. He is someone who specializes in sustainability, specializes in social acceptability and permitting. He's the one who permitted Rainy River. He permitted Musselwhite, and we thought he was the right person to really take this approach forward. We also just this morning announced the appointment of a chairman of On Gold, Mr. John Kimbell. You can join his Wikipedia page. He has a Wikipedia page, and his bio is amazing and almost hard to believe. He is Indigenous himself, went into the arts as a musician, became a conductor on Broadway musicals, and they ended up touring the Bee Gees all over the world, conductor for the Toronto Orchestra. Then went into the corporate world and managing local relationships with First Nations for Hatch, Glencore, Brookfield. So very well versed in the business world as well. And then he deployed a whole bunch of philanthropy, charities. He sent thousands and thousands of Indigenous youth to school, to college, universities. We're really glad to have him on board. And I think it speaks volume to the fact that we're really looking to take a different and inclusive approach for Ontario, because the value that can be unlocked throughout Northern Ontario with the right approach is unparalleled.
Lastly, Simon, news over the next 12 months at Northern Superior and On Gold, potential catalysts.
Yeah, so I mean, we've been doing a lot of corporate work with the spin-off of our Ontario company. Obviously, this cult that I was talking about is really eager to see, further exploration on this TPK property. Then on the Quebec side, we are looking to be very, very active this summer with drilling campaigns to keep building ounces, right? Because I believe this camp, which is, if you put the iron gold assets and our assets together, that clearly can feed the same mill. Not that our projects are not standalone, they absolutely are, but it makes a lot of sense to eventually putting that together. We still can build a lot of ounces, so can they. Right now, this whole camp is about 10 million ounces altogether. And I'm a firm believer that within a year or two, we're going to see that camp at around 15 million ounces quite easily.
Simon, thanks for speaking with Kitco.
Thank you very much, Michael.
My name is Michael McRae. You're watching Kitco Mining.